Hello, everyone. Brad Rhodes here with me again. And today I am talking with a good friend of mine, Mitch Long. He is a long term care specialist expert. And I'm going to go ahead and let Mitch introduce himself. I'm going to ask him maybe a few questions that people have been asking me about. But I'm going to let Mitch introduce himself. So go ahead, Mitch.
Yeah, I'm Mitch Long. I'm the regional director for KazSource, and we're a broker for individual life, long-term care, disability, and annuity products. For whatever reason, I've been in the business for 40 years. I don't know how to do anything else, but the long-term care market has really made a lot of sense to me. I've always asked people, what's your strategy for not getting older? And so if we get older, a lot of times about 50% of us are going to need assistance with, some level of long-term care. So that product and that issue has always been kind of near and dear to my heart. It just makes a lot of sense to try to address that issue.
Yeah. And I've talked to people for 30 some years. I've specialized in Medicare. And I did help people with long-term care planning probably 15 years ago, but it's kind of hard to do everything. And I feel like I've done a good job helping people with Medicare, but I've noticed the last year I've had people at my church, people I come in contact with, clients, they're always asking me, or maybe they're going through it with a spouse or a mom or dad. It's like, gosh, how do I protect myself? We're having to spend out money. So I guess maybe the first question I have for you is, I think a lot of people think that Medicare is going to pay for this stuff. Can you address that?
Yeah, Medicare and Medicare supplement from a long-term care perspective is really short-term care, not long-term care. Generally in the first 100 days of any illness, Medicare will do some things for you, particularly if you're in a nursing home receiving skilled care. But generally, after 100 days, Medicare and Medicare supplement are starting to get out of the picture from a long-term care standpoint.
Mhm.
Typically, home health care is not covered, although that coverage varies by state. So that's the other thing is, there can be some coverage at home, but generally you're going to be in a nursing home or an assisted living facility. Generally, also you're going to be, first 100 days of any illness. The other caveat there too, a lot of people don't realize is that you must be showing signs of improvement. If somebody has an injury that they're going to get better from, then that can, that you're showing signs of improvement. But in some situations, if I'm just 89 years old and my health is going down, I might not be getting better. So Medicare and Medicare supplement can actually get out of the picture earlier if I'm not getting better.
Yeah. Yeah. We had a lady at our church. I think it's been 4 or 5 years ago. She fell and broke her femur, and her Medicare plan, I think she was in a rehab facility for about 3 weeks. And yeah, she was getting better. She just needed some rehab. So I'm pretty sure her Medicare plan covered all of that. But but like you said, it's short term in nature.
Right.
Um, One thing I wanted to talk about was maybe the cost. Well, like if somebody has like a heart problem or God forbid cancer, these Medicare supplements, Medicare Advantage plans do pretty good for that. But maybe a two-part question. What kind of triggers the need for long-term care? And then what are some of the costs involved? I guess either maybe home care and or nursing care. It's kind
Mhm.
of a long question.
Yep. So, the way that you qualify for long-term care is really the activities of daily living. So bathing, eating, dressing, toileting, mobility, continence, and then the seventh one is Alzheimer's or dementia. So generally your doctor is certifying that you need assistance with two of those six things. So I always use the fall and break your hip. That's a common injury among, for women particularly. They probably need help getting in and out of the bathtub. They probably need help with their mobility. That's two of six activities of daily living, and that would trigger a policy or trigger care. Of course, dementia, Alzheimer's is sort of a cut to the chase. If you're diagnosed with that, then, also that would trigger care. The costs are going up. So, part of the issue is number one, we're living longer. People are living longer than they ever had these days. And we're also living longer with illnesses, particularly women. Women are sort of driving all the long-term care claims. If you go to any nursing home that you go to, I promise you 80% of the people in that nursing home are going to be women. They live longer. They live longer with illnesses. I'll give you an example right now. I've got a customer that's on long-term care right in Lexington, where you and I do a lot of business. And he's in a full-blown memory care unit there, and it's $9,700 a month for his care. And we actually had sold him a policy that pays 10,000 a month. So it was very timely. But you know, so it depends on where you go. It also depends on if you live in a more urban area. Obviously in Charlotte, North Carolina, it's going to be more expensive than it is in Lexington, North Carolina. If you adjust that for inflation, and I always tell people too, it really doesn't matter. You know, we always talk about what does it cost for a month in a nursing home right now? Well, if I'm 60 years old, it doesn't matter what it costs now. It matters what it's going to cost 25 years from now. So if you just adjust that for a 3% inflation over 25 years, that same, you know, $10,000 a month is going to double. It's going to be 20. So it's, you know, I need to think about what is it going to cost when I need care, not what it costs today.
Yeah. Okay. Um, so let me ask you this. So maybe two ends of the spectrum. You know, we find some people we talk to, they may not have a lot of savings. They may, you know, could qualify for Medicaid. And then on the other end of the spectrum, I guess my question is, you know, if somebody had 500,000 in savings, or they've got 1 million or 2 million, is there on both ends of the spectrum, is there a place where you need planning, and maybe you don't need to do much planning if you've got a lot of money, or if you don't have much savings at
Yeah.
all?
Yeah, you know, and that's one thing. So people that, you know, don't have a lot of assets, who could, you know, pretty quickly eliminate and get down below the threshold, you know, they could get on Medicaid. Now, Medicaid's not perfect, but I've always said that, you know, we live in a country where a person with no assets at least has a safety net, that they can be in a Medicaid approved facility where they're going to be housed, they're going to be fed. So that's a good thing. I mean, if you think about it. Now, is it perfect? It certainly isn't. Not every facility will take Medicaid patients. Some of the nicer assisted living and nursing homes will not take Medicaid, or they have a limited number of beds. So a lot of times, maybe I'm not going to be able to stay in my community. My grandfather was an example. He grew up in Rockingham, North Carolina. That's where he stayed all his life. But when he had to go into a Medicaid facility, had to go to Asheville. And so that's just where they had a bed available. So that's not a perfect situation, but at least he was able to get care that he needed and be housed and fed, which is good. The other end of the spectrum, I hear all the time people say, well, I could self-insure. I mean, I've had some doctors say, hey, if the cost was $500,000, I could pay it. Well, the question is, do you want to? I mean, just because I have the ability to do that, is it more, you just from a business standpoint, does it make more sense for me to have a stop loss to be able to say, hey, you know, if this goes on longer than I thought it would, I'd like to have the ability to have a policy kick in. So yeah, you could self-insure for a year. But if it's lasting longer than a year, I've got this policy that I can start accessing. So I think it makes sense for the wealthier people. Because from a, you know, just a premium perspective, to them, it's not that big of a deal to pay a premium for something there's a risk that's going to happen.
Yeah. And I know back, gosh, I guess it's been 15, 18 years ago, when I was trying to help people with long-term care insurance, the solutions have changed a good bit. It's not
Yep.
necessarily all about getting one of these policies, the old traditional type. I know we don't have time to go into the absolute specifics of, but can you talk a little bit about some of the different options people have?
Yep.
Not just necessarily your typical long-term care insurance policy. I think there's other ways to help pay for the care.
Absolutely. So back when you and I first started, you know, you just had this standalone policy that kind of worked like your homeowner's policy. I pay a premium. If my house never burns down or is never damaged by a tornado or whatever, then I really don't get anything. It's too big of a risk not to insure, but I might have the potential that I would never benefit from that policy. And that's the way the traditional policies worked. If you needed long-term care, if you needed assisted living or nursing home or home health care, they worked. And I've got a client on claim right now that's in a nursing home being paid for by a traditional policy, but those policies are really going away. And the reason is, number one, that risk that we may never need this. So people say, hey, I pay for it for 30 years. I go to bed, don't get up. I didn't get anything from the policy. Number two, the big issue lately has been rate increases. So the rates have gone up on those products simply because people are living longer and the cost have gone up. So the insurance companies are raising rates. So where the market has really gone is where they're combining it with something else. So it's either being combined with life insurance, or it's being combined with an annuity. We've got annuity products that have long-term care riders on them. And so what that does, number one, is it guarantees somebody is going to get benefit from that policy. So on a life insurance contract, somebody's either going to get the death benefit or they're going to get the long-term care benefit or the combination of the two. And it also fixes the costs. And so the premium's going to stay the same, which is also nice. So at 80, I don't have a 30% rate increase on my policy.
Right.
So,
Okay. And then one of the last questions, and I want to ask you, and I want to preface it by saying, so I'm in this networking group, and when we go around the room and we talk about what's a good referral for me, when I'm talking about Medicare, I'm telling people, hey, or one of my taglines is, I'm looking for people who are needing to make a healthcare decision. And I talk about people retiring, people turning 65, going on Medicare. But something like this, it's not when somebody needs to make a healthcare decision, because I run across people, I know you do as well. Probably most of us, we put things off like this. It's so easy just to not think about it. But this is something that you really need to plan for it way in advance. So my first question is, and I'll let you expand and kind of finish up with some thoughts of so what people need to do. But I guess my question is what is a good age? Is there a good age for people need to look at this? Maybe you can go with that.
yeah. Yeah, absolutely. And, I actually, one time I sent out an email to a bunch of folks about it, had Noah's Ark on it. And I said, you can't start building your boat when it's raining. And so you need to build the boat before it starts raining. And so, we all know, I mean, like I said, we're all living longer. We're also living longer with illnesses. Again, this is a big issue for women. Women live longer with illnesses. So, it's something we need to consider. The younger you are, the less expensive it is. Number two, the less health issues I have. And so, I have people all the time that would love to buy a long-term care policy, but they've had a major health issue that means they can't qualify. And so, what's happened with the life insurance products coming out with those riders is the average age for people buying long-term care has actually come down. The really good age is 45 to 50. That sounds young to be thinking about a long-term care issue. But a lot of times people, when they're making the decision to buy permanent life insurance, we're just putting that rider on there because it's so inexpensive to have that rider. And it's something they're doing now that when they're 85 years old, they'll be able to access that death benefit if they got into a long-term care situation. What I always tell people in retirement, you want as many levers as you can pull, right? You want to, that's why you have multiple investments, because you want to say, hey, I can get money from here. I can get money from there. Same thing with the health issues like you talked about. We want to have a lever you can pull if you got into a catastrophic long-term care situation. You need to have a lever you can pull to be able to pay those costs. The number one risk to your overall retirement savings is uninsured health issues. And so that's something to really think about. And it's not only for the person that's getting care, it's also for the person that might live 10 or 15 years longer. What did I leave my spouse to live on if I've used up a lot of the assets on a long-term care situation? And so it's really something that people need to consider. I think it's okay if people say, hey, I considered it and I'm not going to buy it, but at least you need to consider what that risk means to my overall financial plan.
Yeah, that's really good. And another point, I think sometimes we forget to mention this to people. I know when I'm talking to folks about Medicare or Medicare supplement, Medicare Advantage plan, at the end of the conversation, they'll say, "Well, what do I owe you?" And so I wanted, and so we don't charge for our services. I wanted to ask you, do you charge for an initial consultation?
Absolutely not. So yeah, we meet with the clients. I'm like you. We like to approach things as an informational. We want to share information, let people understand the risk and the cost, and then tell them what's out there to be able to address it. What's right for one person may not be right for another. I still do some of the traditional long-term care because at certain ages, that's the best way to do it. Other people have large amounts of money they could put into an annuity. So that's a great way to do it. The annuities are very easy to qualify for. They're the easiest product to get a long-term care rider on are those annuities. And so, we want to be informational and tell people what's on the market. And we represent all the major carriers to be able to share with clients and tell them what's out there for them.
Well, that's great. Well, Mitch, thanks a lot. Down below the video, I'm going to have Mitch's contact information. You can contact me, you can contact Mitch, but hopefully you got some good information out of this. If you have any questions for us, just let us know. Mitch, thanks a lot. Hope you have a good day.
Thank you. I really enjoyed it.
All right.
See
Take
you
care.
later. Bye bye.
Bye.